Hello, everyone, and thank you for attending the weekly Delphian meeting. For today's agenda, I'll go through the market update. Then I'm going to go through one of the alerts that came in yesterday, I think it's yesterday, for IWM price drop. So I'll show you those results. And then Shawn will be going through some earnings trades. So Sudhir sent us an email beforehand. He's not going to be here, but he said he has some inflation story to tell us, which will be very interesting next week after his vacation. So something to look forward to next week. Just want to pass that along. So let's get started. Okay, so overall, the market, everything's pretty much in the same state as it was last week. Not a lot of movement overall. A little bit of a dip, I would say. But as far as the market pulse, not much has, not a big change. So let's go into that. I think last week we were about here. So, slight drop in the state ones, still not, we never get up to that kind of overbought condition of 45% or so. So we had to turn around prior to that. Not a huge, drop. The state eights have been pretty much flat, and then, not a whole lot of movement, honestly. We did have some big, nice spikes in the new lows, but not any, that 752 on Monday is pretty close to the high for the, 52 weeks, but, the next day, boom, we're way down below. They're still staying somewhat elevated, compared to, like these, single digit new lows. So we're not really dropping down below there. That's kind of little concerning that, we're not getting down to the kind of flat line levels that we like for really bullish markets. So, if we see that in the near future, that'll be, a good bullish sign. But it looks, nothing really definitive going on here as far as state one and eights, bullish, bearish. We had a slow creep down, and then, we're getting close to that kind of crossover 50-50 area. Looks like it's trying to hold that. So that, something to keep an eye on for overall bullish, bearish, if it'll, not cross. Obviously, we'll get a good bullish run from there. So that's all that you can really take away from these right now. Nothing really oversold or overbought. We're kind of in the middle for all those market pulse data points. So we go into state modeling, SPX, still in state one. We had that bounce off of, the stop loss met, ramped really high. We had another kind of drop and then a bounce. Looks like we're bouncing off that again. So these are all kind of, relatively higher lows, at least, for the last month plus. So kind of new higher highs, higher lows as far as that. That is, since it's still holding in state one, it's, definitely bullish, and it's bouncing off that stop loss targets. So obviously our critical point right now is going to be the entry price right here for support, and see if we can make a run up here. We never really got up to it the last time, so this is our initial target on resistance for the upward move. But right now the key is going to be, can we hold that support at 4686, and that also coincides nicely with our 50-day SMA. So as of yesterday is 4678. We had a day below it, came right back the next day. So that's kind of been, what's been going on with that, recently. Still a very strong indicator of support. So if we look at that price 4678 on state modeling, we're pretty much right at the entry price. So very, that even, makes it even more important to kind of watch that right around that level. This is, call it, 4690, 4700 type area for support. So, we'll see if the market can keep, bouncing off of that level and, making moves higher. Obviously, it's been a nice uptrend for quite a long time, and that's, sorry, that 50-day has been, very good to us. Only, a couple little hiccups, but, it did recover from there. But, you look at, we've been talking about this for, I don't even know how long, long time. So well over a year. So you can see, obviously, lots of bounces off there. We'll continue to play that until it fails. I think since we're on that support, that kind of, I didn't get much out of the market pulse as far as, bullish bearish moves. Hopefully we can, that 50-50 will hold, and that would be a nice bullish move from there. I'd say this would sway me, being, making a move off of that below the 50-day up again. I'd expect, short-term run higher at least from there. So that's the SPX. Pretty much, I think last week, we were a little higher. So still the same ranges to watch, up here for resistance and very critical support down here. So keep your eyes on that. Let's move to the Russell RUT. All right, so Russell State 4, did hit that initial target there. T1 has been met. I think we're a little lower today. So, typically we're only 5 days in, so you got another 2 weeks on average in State 4. I would say, the key things to look at here as far as, bullish support are going to be, our long-term channel range, which we're calling 2100. So that's right in between target 2 and 3. So that would correlate to an average move. We talk about, we'll do this all the time. For a bearish move, test that initial bearish resistance, comes back up, and then comes back down. That's kind of with the typical State 4 pattern. The average move would be approximately the bottom of this big channel, which would be the that 2100 number. So obviously, if we're down in that range, we expect it to stay range bound until things change as far as the market, which is, in my opinion, it's nothing has changed aside from kind of the rhetoric coming from the Fed, and I think that's more of test messages to see how things react. But the base case right now is that they're going to continue expanding the balance sheet of the Fed until March. So That's basically, in my opinion, that's basically like that's going to keep the market up, all the way through March, which will be through the end of earnings. So hopefully that's how it plays out. After that, I think there's a lot of concern. Obviously, we're getting high inflation readings. Uh, we had a pretty big move in the 10-year after, the Fed opened its mouth. I think it calmed it down a little yesterday with the talk, with this confirmation hearing. So, can't really predict what the Fed's going to do, but base case for rate raising right now is, I think, between 3 and 4 for this year. So, maybe we get to 1%. But the key thing to look at is going to be the 10-year. Watching that 10-year yield is going to be, I think, the key is overall for when the market's going to have problems. So, and I told you last week, 2.5 is kind of right around that range where the trade-off for equities gets pretty ugly. Anything over that, I think it's going to be bad news for equities. So keep an eye on that long term. So that's kind of the roundup on the markets. I do have a little more, since we're near kind of that lower range of this, that's obviously, I think, bullish sign also for the market. I think, SPY's kind of telling us bullish, just kind of near term. Here, I don't think we're going to break that level. So that would, be a bullish sign also for here. So I'd say bullish near term overall for market. And I'll open up to questions, and then after that, I'll run through that alert that came through for the IWM. Any questions or comments on the market?
Hey, Josh, it's Lee.
Hey, Lee.
Hey, could you throw up the dashboard, please?
Sure.
So, what I'm doing is checking my thinking compared to what we learned a couple of years ago. And I think, let's just say 2 years to make it easy. 2 years ago, 2 years ago, we would have looked at this dashboard and I would have come away with the Russell being in a 4, most everything else in a 2, except, well, the VIX is an 8, and SPX is a 1. And I would have said, I am cautiously, I'd have said the glass was half empty as far as making trades, because in the past, the first thing we did is said, well, what's our market direction? So we went through this process of looking at the dashboard, and I need you to correct me if my thinking's not right, because we may have evolved, and that's what I'm getting at, is previously I would have said, oh, I'm not comfortable making a lot of trades. But now I think we've moved to an area or thinking where we just need to be real cautious and select our trades. It's because the SPX is a 1. I don't know. How are you thinking about determining market direction now?
Yeah.
Because that used to be numero uno.
Yeah, I mean, first off, I don't think you can just, get market direction from looking at this, right?
Okay.
You have to go in and look at where they are in those states, right? So a lot of our trades, we look for our state 2, target 2, or target 3 met, right? So that'll be a bullish trigger, for us for the most part. I think, you have to go through each one of those and analyze those individually, kind of how I did for Russell and SPX, and then kind of put it all together. So it's not like, this this kind of just gives you a glimpse, but you really need to go in detail analysis for each one of those. one thing I kind of forgot to mention, which kind of I think explains this. I read an article, 40% of the NASDAQ is down over 50%, right?
Right, yeah, I've
So,
heard it.
yeah, so that would also include, they didn't talk about Russell, but if, that many of the NASDAQ's down 50, then the Russell's probably worse, right? These are smaller companies. So this reading that made this make a lot of sense to me. Because, Apple and those guys are, pretty much driving the market higher. So that's going to be, the SP 500. The NASDAQ's, getting hit on, about half of its stocks. And then, the Russell's probably over half. So I think that that kind of, article made this a lot more clear on the picture here. So, but, the Russell, it's hit target one, the NASDAQ, QQQ that hit target two and state two, and, the SPX is still holding in one. So, a lot of those bounces come, when we're around target two for state two. And then, the Russell's near the bottom of the channel. So all that kind of just makes me think near-term bullish overall.
Right. Hey, could you flip back to your Russell state page?
Mhm.
Yeah. Okay, so we're in this channel, basically, we've been saying. If you look at the bottom of that, the chart.
Yeah.
So we're in this channel. And one thing we've talked about is if we're in a channel, then one possible trade might be something like iron condor. Does this set up to put out a 30-day trade in your mind on an iron condor, thinking that we'll stay in the channel?
Well, I mean, the iron condor or like an iron butterfly, you would be basically at this point playing it to revert to the mid of the channel, I would guess.
Yeah.
I think the more appropriate trade right now would be, bull put at, at 2100 or below, in case, so you'll just get the time decay on that. So like out of the money bull put.
Oh, okay.
Like when it's at the higher range, you could do, a bear call or something like that. But I don't think it's a bad trade. I would err to an iron butterfly, up higher. See if it can come into that range or, what's the other ones? An iron butterfly, but like if you use like all calls, but like a butterfly with all calls,
Okay.
something like that. So, I've done some trades like that where, like it's a very expensive stock like Tesla, and I'm like, okay, I think it's going lower. So I just buy like say it's at like 1200. And I'm not saying this right now. I'm saying that's a trade I did before, but I think it's
Yeah.
I think it's going down to like 1000. Then you do like a butterfly centered around that, and it's super cheap. And if you get it right, it's a really good risk reward. But it's kind of a longer shot.
Mhm.
So that's how I would play those. You
Okay.
you give them some time, and those will be low risk, high reward. But you're trying to guess that number. And once it, gets around that number, I disclose it out for your profit. And trying to guess it at that expiration is super hard. I wouldn't even mess with that. But
Right.
you could even do multiples. Maybe like $300 or something. So you could do multiples and scale out. And I know Shawn likes doing stuff like that. So.
Okay. All right. Thank you, Josh.
Hey, Josh, Dan here.
Yeah, good questions, Lee. Go ahead, Dan.
I was thinking about the economy going forward, and there's been some rotation into value stocks. And
Yeah.
I was trying to figure out, if there's a way to take our our list of earnings candidates, and somehow go through them and figure out if any of those actually qualify as a value stock, a value play, thinking it might give a better edge as far as making that trade. Is there a way to do that?
We don't have them classified as value or growth in the system. You would have to like basically go off of dividend yields, I would think. That's like a Altria MO symbol, that's a value stock. Yeah, Exxon, like things like that. I think you would have to use the dividend to screen them like that. But yeah, we can do that.
We can do that?
Yeah. Yeah.
Okay.
Yeah, and we can walk you through that. I'm sure Shawn can do it easily, but basically if you take like our liquid stocks in the screener and then, screen for dividend, then you can create your own stock list from it and use that to screen out candidates and things like that.
Okay, so you would use the fact that they're giving out a dividend or a decent dividend to define it as a value stock?
Yeah.
Okay.
Yeah, this is Dave. I kind of like the way on that one too. I agree with the dividend as probably a good indicator of being in the qualification list for value stocks. Also, I'd look at the implied volatility just going into earnings. The value stocks typically will have lower implied volatilities as a general rule going into the earnings announcements than growth stocks. So that might be another way to do it.
Yeah.
And I also want to throw in, while I hold the floor here for a second, that coming back on what Lee was saying, I tend to agree with Lee on being more selective and cautious, both at this point in time and toward, let's say, a couple of things. The downdraft that we had, I think at the end of the first week of the month, I mean, the first day was good and the rest of the week was terrible. And I think all of that downdraft was, inflation worried. And I had to give credit to Sadir, who a couple of meetings ago kind of nailed the be cautious with relative to inflation, and I'd be, tune in next week if at all possible to hear what he's got to say on some other things. That was a pretty good call, if you ask me. And that downdraft was kind of felt across most sectors or most indices and sectors just before we started to get into the pre-runners for the upcoming earnings. So they're all performing pretty well, if you ask me. I think I'm already out of 2 or 3 of them with expected gains, because they came kind of like on the heel of that kind of like downdraft that everybody was worried about inflation. And now that we've heard that Fed speak about inflation in the last couple of days, markets are up even though they're talking about more inflation. So, go figure. Although the pundits say that when a cycle starts inflation rising, usually that's not bad for the stock market until they tighten too much, kind of thing.
Right.
So we'll see. But yeah, so I agree with Lee on, VIX is still up there closer to 20 than below 15. So I still think there's some reason to be cautious, but I think we're coming down off of that major fear of, well, the Fed's not going to do anything. We're going to have runaway inflation. So I think that'll be the predominant fear or not fear factor for the next couple of weeks. We'll see.
Yeah. I remember Sadir commenting on that. I think that kind of like run with the banks was a little overdone, but that's a good precursor for how things will go, how the market react when the market, the rates really do go up. I think the Fed will delay, kick that can down the road. The problem with the Fed right now, there's really a no-win situation for them. You know, either they combat inflation, which, you know, going to drive up yields. You know, if they have to shrink their balance sheet, you know, who's going to buy these securities? The rates are going to jump significantly. Like they're basically the bid, you know, keeping everything low. So when they pull that off, you know, the rates are going to spike. It's going to get ugly, and that's going to, you know, the bonds are going to, you know, be terrible, and that'll drive down the market too. You know, so I think they're, you know, they still have to, you know, message out there that they're going to do whatever to combat this inflation, but I just don't see a good situation for them down the road. So I think, you know, they're just going to try and delay it as long as possible. Okay, thanks, Dan, Dave, Lee. Great questions and comments so far. The one thing I did want to show you guys really quickly, and a lot of us have done this. So you may have got the same alerts. I didn't pull up the alert, but no, daily alert. I don't know if you guys saw Microsoft came in, you know, yesterday in the study. It's always one I like to jump on. But here's another one. So the IWM 5-day drop, 3 to 15%. So this triggered on the 10th. So yeah, we could trade it yesterday. I think we're, you know, maybe a little higher than we were when you could get in yesterday. But this trade, I have it set up for a bull call, but you know, I pulled up the back test here. This is for the bull put, you know, how we, you know, do all of those trades now, which I can show you, which is, you know, one strike below the current close and then buying the lower standard deviation, you know, I'm looking for 25%. So that's the trade setup. Oh man, whoops. Guess we can't go back there. So this tests really well, which is why I have it as an alert. So this is the bull put and the bull call. So, you know, I've looked at the bull put, very strong returns on this, which gives me another kind of inkling on market direction, you know, short, medium term. You know, 94% win rate, 372 and 25. So I like those odds. So, you know, this came in the alert, you know, you can put in that trade. You know, I was looking more for the bull put, so I changed the back test on it, but obviously, you know, great results, you know, and kind of lines up with how I looked at market direction overall. You know, we're near the bottom of the range for, you know, the Russell, which is, you know, RUT is same as IWM here. So I wanted to pull that out and show you guys that, and then, you know, the other part of that is state targets. Did anyone else see this alert? Because I know we walked people through it, but you know, to put it in your guys' system. Eventually, I'll have this as a ETF study, so so you won't have to have that created in your own system. We're working on the ETFs. So what's that?
You did see the IWM last couple of days ago, so
Yeah.
it's showing up. And that leads to a leading question. We cover certain stocks that are in the candidates for like pre-runners and some of the earnings trades. Have you back tested any of the indices or ETFs on indices to see if they would actually qualify as a timing trade. I won't say there's no earnings date for an index, but there's distribution times come into play, and it might be interesting to think about that. Lee was asking about iron condors and in 30 days. Is that a good idea, bad idea? I think he was talking about IWM at the time.
Mhm.
But iron condors I'd be more interested in looking at whether the implied volatility is whether he expects it to rise or fall in that 30-day window that he was looking at for the expiration period that he was thinking about. And
Yeah.
that would fall in right in the middle of earnings, if you ask me. So think about that, like when you're looking at your iron condor there. Iron condors work out when the implied volatility falls relative to when you put on the trade, and not when it rises. So you have to make your own call there on 30 days out where you think that might happen.
Right. Yeah, he was talking about doing with the index. So obviously there's no earnings there, but typically if you've had down moves, you're going to have higher IV, after down moves. But yeah, it's something to look at. Looking at the IV 30, 60, things like that.
Yeah, there's no earnings. Yeah, there's no earnings date, but quite often a lot of the leading stocks in an ETF or like the Qs will report on a certain period of time. I think the FANGs usually are like the second weekend. So big tech, high growth is like during that week. So even though they don't have earnings, there's definitely a time when they all report, or a lot of them report, or the early ones report, where all the financial analysts, take their, this company did well and another company just like it. It's going to report 2 weeks later, so we can, kind of infer one from the other a lot of times. Doesn't always work, but I'm just saying there's no earnings date in a lot of these ETFs and indices, but there's a lot of information that becomes known all around like 1 week that can become significant, I think. And you can play that like, do I anticipate implied volatility to rise or fall before or after that week? I do that a lot. It tends to work in certain groups,
Right.
not across the board, but certain groups it does.
Yeah, we definitely haven't done anything as far as, the indices, right, with regards to, the different symbols. Not sure. We'll discuss it, and see what we can come up with on that. So, so the other thing on the 10th was, and you can always do this if you have certain symbols, that have met targets on that specific day, or like the day before, or recently. So QQQ met target 2, state 2 on the 10th. So it was the same day I got that IWM alert. So I went in and did, I'm in the state targets screener here. So I just did every time QQQ has met and state 2 target 2. Then I go through and do a bull put. So, that win percentage 83%, really good profit factor. So, that in addition to what I saw with the IWM test, also kind of confirmed what I was looking with the, the market overall. So, two things, obviously I'd like to have this up higher around 90, but, it's still really good and, great profit factor. So, so those things all, and you can do these too when you're see a symbol and like, the pre-runners, and you can look at the state modeling and like, okay, it's in state 2, it met target 1, go back to that day, and then you can test it to see, how well it does when the bull put, or, whatever strategy you want to do. So those are two things, I'm always looking for confirmations, extra things that kind of, figure out which way things are going. So any questions or comments about these two, the IWM or, this QQQ test? All right, well, I'll end my time then and hand it off to Shawn.
All right. Yeah, thanks, Josh. I appreciate it. So, like Josh had mentioned, I'm going to show you guys I'm going to show you one of the earnings example that I have for this week for this call. And, I did want to mention too, that's a great point what Josh brought up for IWM and QQQ is, to see something happening in the market and be able to have a back test already essentially saved on that type of move, and then those auto populate for you. So saving those back tests and saving those results in your platform is key, because it could be something easily that you would forget about, see the market, kind of falling like it did Monday morning, and then totally not know that there might be a trading opportunity there based on some back testing you've already done. So using that to be able to save it in your platform is pretty huge. Hold on one second, sorry. Got a new dog and he wants to bark. So other than that too, let me share my screen real quick. And what I'll show is, I know Dan had mentioned regarding the dividend screener. So I pulled that up kind of when you guys were talking. So yeah, within the platform, Dan and everybody, you can always go into, the stocks and go into your screener. So just where you would be looking at like your Delphian studies or your daily alerts, you can use the screener and you can come to custom, and there's so many different, fields that you can select to do a different custom screener on. But when you go into fundamentals, you have a dividend selection here. And when you open the dividend selection, you can actually use a variety of selections within the dividend. Here I just did yield percentage annual. It's going to be greater than 3%. So if you do that and I click on it, you can see annual yield is greater than or equal to 3%. And we can see a list off of the new liquid options list. I have 70. So you can get creative with that and add a couple different layers on top of that. You can obviously change the yield percentage, to 2 or to 5 or wherever you want to do, and hit find stocks. And that's going to get you obviously a different set of stocks there that you can kind of analyze. So I think one Josh mentioned was Altria MO here. We have that on the list. So you can see that's one of the ones. Some of the ones that you won't see would possibly be like an Apple, obviously different stocks like that do not pay the dividend. So yeah, get in here, mess around with it, and you can save that stock list if you want. So when I did 2%, it came up from 70 to 126 items. But yeah, you can create a stock list. So you can add to a stock list or create a new stock list. And then anytime you're wanting to do further analysis in state modeling or earnings or whatever, you can use that specific stock list to run some ideas on. So does that make sense, Dan? Is that kind of what you're looking for?
Yeah, Shawn, that's I like it. Yep, that's something that I can work with. So
yeah, and like anything, I think if you start, I typically start fairly wide. I might say a yield of 1%. I think I did 1% when Josh was talking, and there's like 200 and so items. I did 3, so there were 70. So I try to start more broad and then kind of work my list down, whatever works best for you. But yeah, if you need any help with that, just feel free to reach out.
okay, will do. Thank you.
Yeah, no worries. And then, so what I wanted to show you guys was, we have, we're kind of in the middle or the midst of the earnings, the Q4 2021 earnings. So what I wanted to show is actually on Friday, so this Friday the 14th, we have the first, I believe it's the first bullish runner coming out, and it's KB Homes. So KB Homes is having earnings today after the market closes today. So then the bullish pre-runner would be, the bullish runner would be active for Friday. So one thing that I noticed off of the bullish runner, I'm going to pull up the chart, is that when I have the chart up, you can always go into stocks, go into chart, and then within this charting section, you can lay over multiple different factors. You can lay over different templates, entry exit dates. You can lay over studies. Here, I actually went to indicators and added in my earnings date. So we can see on top of this chart here, I have earnings as my indicator, and you can see the different earnings dates for KB Homes for the past 4 quarters. This one here is the one that's upcoming. So if you look at the past 4, and we have this trade or this stock essentially has a bullish runner, something that might stick out is we had two here this last year, the same quarter, a nice run up after the earnings announcement. And this one, we have a nice run up after the earnings announcement. But here, you know, you have the earnings announcement and the stock essentially sold off a bit. Did end up coming back similar to this quarter here. Earnings announcement, stock essentially went sideways, sold off, and then started kind of creeping back up. So the point is that you can see there's a pretty mixed bag over the past 4 quarters of what happened with the stock price after the earnings announcement, but it still qualifies as a bullish runner. And I think that shows great magnitude to the actual strategy selection that we used and the changing of the strategy selection from, you know, possibly the long call to what we use now, which is the bull put. So, you know, what I want to show you now is the actual results that we have within the earnings calendar, and then I'll show you the actual list that we have saved as well. So keep this chart in mind, and I can go back in time a little bit. You can always scroll back to check it out as well. But if we go to the earnings calendar, and this is from yesterday because I went back one day, but if you look at the earnings calendar for KB Homes, and we're looking at a bullish pre-runner strategy, and I'm using the bull put strategy exactly as we have created within that earnings shared file, you can see we're looking at a 100% win rate and an 884 profit factor. So $884 profit using the bull put strategy, strike selection model like Josh used when we had that earnings plan sent out. And then you can also see the individual results here. So the point really that stuck out to me is these two, not these 2 dates, because we figured those would be fairly profitable. But if we're looking at the June 23rd and then the actual September, you know, in theory, if you're trading a long call or if you're trading a long stock, not in theory, but in actuality, you're most likely losing money on those trades. But within the bull put spread or the bull put strategies that we've composed of, you can see trade 10 and trade 9 here, we're actually making money on the trade. So a trade or a stock movement that should be, you know, negative that we actually got wrong based on the bullish runner strategy actually was able to end up being profitable by just switching that trading strategy to a bull put. So a very key note to make there, you know, you can essentially be wrong on your direction, but you can still possibly make money if you employ the correct strategy. So wanted to show you guys that. You know, like I said, we have the results here. You obviously can replicate that within the earnings calendar, but I do want to show you how these results, so 884 and the win percentage of 100, you know, match up with this bullish runner sheet that we have saved online, which here is row 20 for KBH. So KBH, you're going to want to get out 20 days after the earnings announcement if you don't hit your profit target, but you can see 100% of the time. So we have a profit of 884 and 100% win rate. So, you know, a really interesting way to look at it when you're trying to compare, you know, what you see there, you know, in the chart, what's going on, and then saying, wow, can I actually make money trading this stock? And, you know, based on that bull put strategy, you should be able to. So I wanted to show you guys that. And again, that KBH is coming out. We should see that pre-alert come out Friday morning. So this Friday morning, we should see the pre-alert populate for us with the you know, the strike prices, excuse me, and the current price of the stock at that particular time. So again, earnings announcement is today after the market closes, so we'll see how that report works out for them. So any questions, comments on that? All right, well, I mean, that wanted to keep it pretty quick and easy. That was pretty easy. I think that chart really shows a lot. And again, you know, using Delphian like that, you guys can go in there and replicate all that, check it out. If you want to go back further in time to look at the earnings, you can do that and kind of see how it plays out. And obviously not only with KB Homes, but with other stocks too. You know, make sure that analysis that you're using is in depth, but you want to make it concise and pretty quick too. You want to be pretty fast where you're not spending, you know, your entire day within Delphian, but making sure you're using it to its fullest. So that's all I had. Josh, any questions? Anybody, feel free to reach out to me. I'm here, and thank you guys for the time.
All right, thanks, Shawn. And you know, that's all we had for this week. Did anyone have any questions or? All right, well, we'll close it off there. Thank you all.
Josh, this
Yeah,
is
Winslow.
Winslow.
Yep.
I had a quick question. It's kind of goofy.
Okay.
There are a couple of, maybe a handful of symbols that are good earnings pre-runners and also good bullish runners.
Mhm.
And I wondered if we could somehow back test sort of the combined effort on that, so that you'd get in 2 weeks or 3 weeks ahead of it, like Microsoft, I think is one of them, and then you'd hold on for the option would be more than 60 days, maybe 90. So is that something that you could do, or in reality, you have to get out before earnings, then you have to wait a day, and then you have to get in on the bullish runners?
Yeah, I mean, how it's designed right now would be to, get out. So you miss that whole volatility crush earnings move. Um, Microsoft would be a good candidate to study because it's not a big mover typically around
Right.
earnings.
Right.
But you're still gonna take a hit on the IV through that. I don't know, that's something we can look into. I wouldn't recommend you do that.
No, but the thought crossed my mind. Yeah.
Yeah.
Okay. Yeah, that's it. Thanks.
Okay. All right. Well, thank you all, and we'll talk to you next week.
Thank you.
Thank you,
Thanks,
guys.
everybody.